Elon Musk, the chief executive officer of Tesla and the world's richest person, said on Friday he was terminating his $44 billion deal to buy Twitter. After Elon Musk disclosed his intention to exit the deal, Twitter board chairman Bret Taylor responded with a threat to take him to court. "We are committed to closing the transaction on the price and terms agreed upon with Mr. Musk and plan to pursue legal action to enforce the merger agreement," Twitter said in a statement. "We are confident we will prevail in the Delaware Court of Chancery. Let's go through the complete story now. Here's the original deal. Twitter's board has accepted an offer from billionaire Elon Musk to buy the social media company and take it private," the company announced Monday. The stock closed up 5.64% for the day after it was halted by the news. Free speech is the bedrock of a functioning democracy, and Twitter is the digital town square where matters vital to the future of humanity are debated, Musk said in a statement included in the press release announcing the $44 billion deal. "I also want to make Twitter better than ever by enhancing the product with new features, making the algorithms open source to increase trust, defeating the spam bots and authenticating all humans. Twitter has tremendous potential. I look forward to working with the company and the community of users to unlock it." The cash deal at $54.20 per share is valued at around $44 billion according to the press release. Twitter would become a private company on completion of the deal, which requires shareholder and regulatory approval. The announcement ends a weeks-long saga Musk kicked off when he disclosed a large stake in the company. Soon after, the company said it would join the board, only for Musk to reverse course on the plan several days later. Then he offered to buy the company at $54.20 per share, his best and final. That offer valued Twitter at about $43 billion. Problems with the deal. Though Musk had indicated that his primary interest in Twitter has to do with what he views as the company's censorship of free speech, Musk's critics are concerned that the billionaire's control over the platform will result in the silencing of their voices and others with whom he may disagree, given that he's often blocked critics from his account. The board seemed to have two reasons to consider rejecting the deal. The first was that the offer, while priced well above Twitter's current share price, was arguably too low given it had recently surged above that price tag. The second was that it was initially unclear how Musk would fund the deal. Despite his being the world's richest person, much of his wealth is tied up in Tesla stock, meaning he would likely have to borrow against his holdings to fund the deal. But the offer became more concrete once Musk announced in a Securities and Exchange Commission filing that he received commitments for $46.5 billion to help finance the potential deal. That included about $25.5 billion in debt financing from Morgan Stanley senior funding and other firms. He said he committed about $21 billion in equity financing. Musk said in the same filing he was exploring a tender offer to purchase shares of Twitter directly from shareholders. He came under SEC investigation after tweeting in 2018 that he had secured funding at $420 per share to take Tesla private. The agency charged Musk with securities fraud as a result of those tweets. Musk and Tesla reached a revised settlement agreement over those charges in 2019, which Musk is now attempting to terminate. Musk said at a TED 2022 conference in Vancouver earlier this month that he did have funding secured at the time of that tweet, adding that he was forced to concede to the SEC unlawfully in the settlement. The SEC declined to comment on Musk's remarks at the time. Shortly after the conference, a court filing from a class action lawsuit by shareholders against Musk revealed that the judge presiding over that case concluded Musk knowingly made false statements about the funding at the time of the tweet. Also at the TED 2022 conference, Musk shared how he would like to see the platform change under his ownership. "I think it's very important for there to be an inclusive arena for free speech," he said at the time, acknowledging that some content moderation would be needed to deal with explicit calls to violence and ensure the service complied with the laws in the country in which it operates. He also said he generally would prefer timeouts to permanent bans, which could suggest a path for former President Donald Trump to rejoin the platform under Musk's control. Twitter banned Trump from the platform following his tweets about the January 6th insurrection at the US Capitol, citing the risk of further incitement of violence. Some Republican lawmakers have expressed excitement at the prospect of Musk owning the company after complaining for years of what they say is censorship of conservative voices by mainstream tech companies. Twitter and others have said they do not censor speech based on ideology, but instead enforce their stated community guidelines. Transaction terms and financing. On Friday, House Judiciary Committee Republicans asked the Twitter board members to preserve records related to Musk's bid, setting the stage for a potential congressional probe and subpoenas should the party win back control of the chamber after this year's midterm elections. Under the terms of the agreement, Twitter stockholders will receive $54.20 in cash for each share of Twitter common stock that they own upon closing the proposed transaction. The purchase price represents a 38% premium to Twitter's closing stock price on April 1, 2022. Which was the last trading day before Mr. Musk disclosed his approximately 9% stake in Twitter. Mr. Musk has secured $25.5 billion in fully committed debt and margin loan financing and is providing an approximately $21 billion equity commitment. There are no financing conditions for the closing of the transaction. Backing out of the deal. Musk has accused the social media giant of misleading statements about the number of fake accounts. Twitter has made misleading representations over the number of spam bots on the social network and hasn't complied with its contractual obligations to provide information about how to assess how prevalent the bots are, Musk's representatives said Friday in a letter to Twitter as part of a regulatory filing. The Tesla CEO had earlier threatened to walk away from the deal if the company can't show that less than 5% of its daily active users are automated spam accounts. According to the Washington Post, Musk has been unable to pin down the percentage of Twitter accounts that are not genuine, despite being given access to internal data. Meanwhile, Twitter had said that it removes 1 million spam accounts each day and denied the claim, saying bots are less than 5% of the total users. Musk also argued that Twitter has failed to operate its normal course of business. The San Francisco-based company instituted a hiring freeze, fired senior leaders, and saw other major departures. The company has not received parents' consent for changes in the conduct of its business, including for the specific changes listed above, Musk said in the letter, calling it a material breach of the merger agreement. Back in June, Musk had openly accused the microblogging website of breaching the merger agreement and threatened to walk away and call off the acquisition of the social media company for not providing the data he has requested on spam and fake accounts. Against this backdrop, Twitter CEO Parag Agrawal last month stood by his company's longtime spam metric. Twitter has and will continue to cooperatively share information with Mr. Musk to consummate the transaction following the terms of the merger agreement, the company said in a statement in June. The entire deal has been a frenzied and untraditional affair largely played out on Twitter's social network. Musk went from being merely a prolific user to revealing a significant stake in Twitter and then launching an unsolicited takeover offer, without detailed financing plans, within a matter of weeks. The agreement came together at breakneck speed in part because Musk waived the chance to look at Twitter's finances beyond what was publicly available. Musk's termination letter torpedoed Twitter stock further and threw the company's future into heightened disarray after months of chaotic ups and downs, mainly based on Musk's shifting public statements about the transaction. Employees on Friday were told to refrain from posting on Twitter or Slack about the deal, as it is now considered an ongoing legal matter according to a person familiar with the situation. Let us know what you think about the whole situation in the comment section below. See you guys in the next video.